Hello, everybody. Kirk Spano and Scott Shooter Henderson on March 16th, 2024, one day from becoming a leprechaun.
Yeah.
All right. So we're going to cover some major markets today, and I am looking forward to see what special sector coverage we have because I don't know that ahead of time. Shooter, how are you doing, and how is the dollar doing?
It's stuck. And, we continue this move down. It's still telling me that we have a rally, when I look at it over on the weekly. So, we push down towards this 101. I think the market's just turn around. So I'm a little bit bullish with that thought.
Okay.
Now, of note, and this sort of direction, just popping in XLU, notice how we're building out this flag up here to the upside. So we do have a flight to safety as well. That's sort of happening at the same time, right?
Well, that would normally jive with the dollar having an uptick, which might happen if we get mean Jerome Powell.
Yeah. All right. Now, going out to the weekly on our SPY, I think this top pretty much, I don't even think anybody would have gotten taken out if they held the 515 calls because it didn't stay up there long enough, as far as selling those covered calls. So I think that 530 number is a pretty solid bet to the downside because now we got a fairly deep two down at 501.22 from where we are now. So about $8.50 lower.
So right now we're at 510, 511 on SPY.
509.83.
509.83 is where we are now.
Let me just drill down to, this is the main chart that I've been showing.
So we're close to a short-term top. Whether we go a little higher or not is, we'll find out.
Will, but we've got this huge drawdown off of this 3. Measures all the way down to 470. So it should stay in this flat. So we should have a sort of a consolidation in this zone here. And now the question is how long that is. Does it end in April? Okay. Or does it push all the way out to May? But I think by the end of May, I think that would be done. But if history tells us anything about the S&P, when we get stuck, sort of a stagnation, it takes us forever to get out.
Okay. I'm going to make a prediction because people like it when I do that. I'm going to say that the correction starts on March 20th, so on Wednesday, and that it ends on April 29th.
Okay.
What happens at the beginning and end of that time frame? 2 Fed meetings.
Yep.
So I think we get ambivalent or mean Jerome Powell this Wednesday, and then I think we get slightly nicer Jerome Powell in May. And I think the theory that I have proffered, which one of the Fed presidents agreed with, just is going to gradually gain steam. And I think they're going to take 50 basis points off in May without committing to a rate cutting cycle. That's what I think. But I'm probably wrong. I don't
know what he's going to do at this point. It's been, markets are not giving me a tell of what he's doing. However,
right.
I will say
so that means the markets are a little like, we don't know.
I mean, you can see it in the pump. I mean, we don't hold anything, and on the upside, this has been the challenging part the last 2 weeks. That CPI report really pretty much at any other time when we were this toppy would have taken us down 3 to 5%. And man, they bought that dip right off of that. I mean, we just did this little rollover for, what was it, 3 hours? They bought the whole blasted thing back. I mean, just like that. I mean, and we don't, that's sort of been the MO since, October of last year. I mean, it's really October of 2021, but they're just buying the dip in the Magnificent Seven. I mean, they're rotating. We're even seeing rotation now. I mean, it's just going into banks and oil stocks.
So on this chart, you have RSI. This is a daily chart,
right?
And RSI has started to turn over. So on the weekly chart, my guess is that it just flattened out.
No,
that's pretty much flattening out.
Yeah,
it stopped going up when the daily started going down. So if the daily keeps heading down, it'll start to pull the weekly down.
Well, yeah. I mean, we're in a mound. So, from March 23, right, through just early November, late September 23, we had our first mound, right? So we're doing another mound. So this will roll. RSI should roll back down to about 50 or a little less, 45 in that range. Then we start our next leg up. So, that's this entire flat here that we're going to build out. It doesn't necessarily mean price is going to come all the way back down to the 200-day. The most likely case is 50% back from where we are. So, around 480. That's the most likely point.
Can you scroll and show more history going back to about 2014? You see how RSI gets overbought in 2021? and then it jitterbugs around the overbought area. So just because RSI gets overbought doesn't mean it has to come straight down like it did in 2023. It can jitterbug around at overbought for a long time, and that'll show more waves up in price. So you could see this RSI relieving itself for a period of time and then go back up. And you could see jitterbugging on the RSI along the overbought line for quarters into next year, which is kind of what I expect before we get the next big leg down. I just want people to understand that even though it's overbought doesn't mean that it has to come down in a straight line. It can jitterbug, gradually give up its strength, and then fall off.
Yeah, very often do you get escalators down. I mean, quite often it's an elevator down. Mm-hmm. But the thing that is most consistent, this really, all of my work and study revolves really around divergent RSI. So what I'm always looking for is, how that's structured. So we have our first confirmed high here, right?
Right.
And then we build out this structure, which is a cycle, and it ends here on this push. So that's our first mound grouping, which if we went out a larger time frame, we'd see it. So from here, then we get our second mound, which is much shallower, right? But in reality, that mound's not done. This is like a drive one. We have not a confirmed high, but a higher high in price and a lower high in RSI. So that's a divergent high. We get another divergent high here, right? And notice how RSI structure is lower, right? Then we get another divergent high, but notice how it's regrouping. So in other words, this entire structure from January 2018 to January of 24, 6 years, is a mound on probably a 3-month time frame. So this entire leg, I'm thinking this leg's up from here, because if you'll note that our drive one, our cycle wave, notice how long our cycle wave is. And this is drive 3. So right now it's suggesting that it's a leading diagonal. And, my thought from what I keep seeing in price and the dollar and everything else, and the just how they're buying the dips and they're doing the rotation, they're trying to build this up. That potentially takes our cycle wave 3 and morphs into a primary wave, and it could take us all the way up to the 720s, as far as the look. I mean, at least the structure that I'm seeing internally within the RSI. So I think there's, I actually hope we back test, January 22 resistance down here around the 50-day, around 448, 450, because that's going to give us the momentum back to the upside, the push to get a new breakout, the higher highs, versus where we get stuck in this stagnated flat. And I think those are the two different scenarios that we're looking at. Make sense?
It does. And it jives with what I just said, is that RSI doesn't necessarily have to suddenly become oversold in any short order. It can jitterbug around in different stages of being overbought for a while, which is why I think you buy the dip if we get a dip.
Yeah. I mean, that's, we get a dip down to this 470, that's the buy the dip. Right. Now, I don't think that happens in April. I think we get a little drawdown. It does look like we're going to get a bit of a drawdown before March 22nd. With that, I'm going to progress to the NASDAQ.
Okay. Apple, Tesla under pressure.
Yeah. Tesla's in huge trouble. But I think it's short term. Just when we'll address that another time. But, looking at the NASDAQ, you note that we didn't have quite as aggressive a drawdown as we did in the SPY. And, even though we were euphoric, it wasn't as euphoric as we were here when we had the big pump and all the Magnificent Seven. Okay. So if we go back and look at the SPY, notice how more aggressive that slope is, right? So it's like we reversed in comparison. So we got more aggressive in the S&P on this last move and less aggressive in the Magnificent Seven, and which is why I think we were seeing the rotation, because they weren't getting enough price on their gaps, and they had the algos working the alternate sectors, which is why we continued to see the rotation. But right now we're looking for an intermediate wave 3 around 451, because it looks like our retrace is done. Even though we've broken trend support, we actually have a pretty aggressive lower band that's down here. If we let me pop it.
You pop it. Pop it, baby.
Pop it.
So while he's putting together his chart, I'll just tell you, remember, I was a quant before it was cool, and I've played with algorithms a lot. And what I know about the machines and why I don't really do a lot of it anymore is, one, they're impossible to beat. However, you can understand what they're doing. And if you
Yeah,
understand the nature of the market driven by the machines, you understand that they'll push as long as they can keep the momentum going.
yeah, and then
And
they become the sellers. So they're going to either push it up or push it down.
well, what they often do is they push and push and push until the momentum breaks, and then they let the air come out, and then they push, push, push some more, and then it doesn't last as long that time. Then they let the air out, and then they push, push, push some more, and then they head straight down, and then
Yeah.
they just change directions. So I don't know if this is 2 or 3 more steps up in this market or one, but at some point, the machines go, it'll be easier to push it down than to push it up. So right now in a liquid market, it's easier to push it up than push it down. But in a less liquid market, maybe in a year or two, at some point, you're going to get one of those elevator drops that, last for 6 or 9 or 12 months.
3, 5, or 8. And now this, so I look at you, this is 1, this is 2. But notice how we have our sort of a confirmed high in this mound on drive 1. Then everything
Right.
behind that was divergent. Now notice our first drive was still divergent, and we sort of had a confirmed high here, which is like right here on our second mound, and then a divergent high behind that.
Do you not count what happened in 2019 as your first mound?
Well, they structurally, when I, okay, time frames, when you step up and step down, depends on what time frame I'm referring to. As far as the weekly, I'm looking at this leg structure right here. I'm not, so I'm not looking at this in that structure when I'm looking at this leg. I speak of the shorter time frame because that's the leg we're in. So that's the leg I have the most accuracy in following, because ultimately I want to know what its outcome is versus the larger leg. Because otherwise, you want to look at the larger picture, grasp the concept of the upside, and then you want to focus down on the shorter time frames, so you can get a visual on which direction. Third standard deviation was actually more aggressive in 2019, January 2020, right?
Okay.
And look at our drawdown in October 22, right? That, almost down to the third standard deviation. So we like to break the second standard deviation on our drawdown. But we haven't had a major flush where we crossed the third standard deviation since 2016. And what was that?
All right.
Right.
So
then we crossed it in 2009. So the financial crises that we had related to economic events were more aggressive in RSI than COVID. So it's where, I think a lot of people didn't know what to do in COVID. And I think more people,
because they're all afraid we're going to die.
Yeah. It's sort of like, global thermonuclear war. If it happens, doesn't really matter what you own.
Right. So just leave this chart how it is. You see, from 2014 to 2016, that was a sideways moving stock market. And you saw the RSI, fell.
Yeah.
And now you have 3 mounds, essentially, since then. You have
the structure here, and then there's another one here.
Yeah. So I'm just trying to figure out, are we on the second drive right now, or are we actually in the third drive? And it just kind of depends on where your beginnings and endings are.
Well, because they're stepping. I mean, if we come out, we look at a 3-month time frame, and honestly, the SPY is not the greatest chart to look at for, however, I don't have SPX worked up, otherwise I'd use that. But this start of our leg here, which is our cycle wave 1, which starts at 1917 in 2003 or whatever that is, right? Then we have, basically, we're in this flat, for 6 years. That's a long time. Even though we had a growing market, the back test was very aggressive to the downside. So when we got that drawdown, it basically took out. I mean, really, I don't think anybody came out of 2008 and was in the money, because we didn't break back above that until almost 2011. So, I mean, that entire period, really from our high that occurred right at 121, and I'm just trying to get that to pop for me. So that was January 1 of 2000. Once we hit that high, it was, let me come back here. So it was January, February 2016 before we broke above that. So that entire period there is a flat. I mean, it just, even though we broke out above it, I mean, it was just this long consolidation period. That is a stagnant market to me. And actually, there is some concern that this becomes a stagnant market here, in the visual. Because
like maybe 10 years of a choppy market.
Yeah, which we don't want to be stuck in. No.
Well,
if
we're
it's going to be rinse and repeat of what we've seen in the last 3 weeks.
Yeah, but then we can just all retire like Bob. Channeling stocks, Bob, channeling stocks, right? Mm-hmm. I mean, you remember that commercial? I just sell at the bottom. Well, he really did probably sell at the bottom. I just buy at the bottom and sell at the top, and I just keep doing it over and over again because it's easy. It's easy, right? It's easy just to always buy on the bottom and sell on the top. It's easy. Yeah. All right.
Okay, let's jump and look at the Russells. You didn't want to look at the Dow, right?
Yeah. They should have a theme song.
Yeah. Now, this is an overshoot right now, what we have, this push. I mean, and we're going to find out really quick whether or not we're going to get a decent drawdown. Right now, the count, it's sort of an escalator down, not an elevator. My target one right now is 196. However, we could get a 3 here, because I always use the term glaring because that's, what my coach taught me. But we have sort of a double top in RSI here. So it's, it's not glaring.
When was the last time the Russell was overbought?
Yeah. Well, overbought.
Yeah. So 3 years.
January 21.
Okay. So 3 years.
Yeah. And nice.
That's a pretty substantial correction. A 3-year correction is a very long correction.
Which, by the way, that only happens less than 30% of the time. Whenever you have a flat, about 70% of the time, they resolve themselves to the upside on that kind of move.
That is a combination of indexing and the Fed being tight.
Yeah. So that honestly, that just shows you how much the Fed can affect the markets.
Yeah. I think we get a little pullback here in the very short run, but ultimately I think it breaks above your blue line.
I think it does too. I mean, note where, it's coming out to the monthly. I mean, we've got a 5-wave down, which is going to take us way the heck down.
Yeah, I don't think that happens.
I mean, it might not. I mean, we've got a lot of things have to occur here, but I still think the flat is the more likely outcome.
Yeah, I think just when you see the blue line and the red line converging, I think it's
that's
pretty clear that it breaks out of that triangle to the upside.
The bias
How does it go? Who knows?
The bias is that we have to break above this.
Yeah.
Bias. If we don't get above that, we're not going to have a breakout. I mean, we're just not going to move to the upside. And with that, the first thing that has to occur, we have to break above this 212. All right. Because the most likely with a breakdown here is that we get another breakdown and that leg is deeper than this. I mean, we need some kind of push back below the 50-day between the 200. So 50% back there. We really need a 157 back test for us to get any momentum to push back to the upside. So, I mean, that's a challenging environment with interest rates where we are. And obviously with a hot CPI, thinking the Fed is going to ultimately have to accept a 3% inflation for God knows how many months, maybe 2 years before we see 2% again.
I got a lot of hate when I said that inflation in the last couple of years.
Yeah. Well, it's sticky. That's for sure. It's sticky.
Until we build houses. So here, I got one question here. So let's suppose that just ends up in a flat for an extended period of time and doesn't break higher for a while. That could be explained by certain companies, especially those super financial sensitive, just continuing to get battered, but a handful of companies that do well breaking out. So they could fight with each other. You get one batch going down, one batch going up. That means the index chops around.
I think the best marker for us to go back and look at history of tightening cycles, what percentage of small cap, mid caps, et cetera, struggled. I think a practical number is 20 to 30% are going to have challenging times rolling over debt because they can't roll from 3%, which was probably being a little generous because some of them probably even paid less than that, to 9%. They can't absorb it. So structurally, they're tightening in every way they can. And honestly, Facebook, Meta is a great example. And it was an ingenious move. And I never thought Zuckerberg would do that. I didn't even have a thought of that. But the restructuring that he did was really actually genius, looking at the financial conditions and then restructuring the company the way he has. Because honestly, it's got some significant upside from that. But I don't know that the small caps are going to have access to the capital that he has, that large moat that I like to talk about. And I think that's our struggle, because their resources, they can have, 300 million in the bank, but if their operating expenses are running at 30 million a month, how long are they going to survive without rolling over their debt? I think that's the issue that we face in small caps and even some mid caps.
Companies that have good balance sheets will do better. I think that's
Agreed.
pretty universal.
Agreed. All right, let's take a look at TLT. I know
Okay.
you wanted to talk about that. Let me jump out to the weekly. I'm seeing 92. I'm going to give it a shot long again down there, even though long hasn't been working as well as the puts have. That's for sure. But there's a good chance it rolls lower than that. But right now the count's telling me we're done. RSI sort of.
I think that TLT sets its low in the next 6 to 12 weeks, depending on Fed meeting stuff. And then from then on out, TLT is probably a winner for a pretty long time.
I would agree.
And I think it drifts up and then it spikes up.
Yeah. And
we'll see.
I mean, it could. This is my nemesis.
Yeah. To me, it's recession insurance. That's all I use it for.
Yeah.
And I'm not ready to buy recession insurance.
Okay. Let's jump over. Now, this week I'm going to do something a little different in the sector ETFs. I want to focus on what's working. And right now, I mean, through all the noise that we've been getting in the rotation and everything else, clearly we have rotation into the bank. AKA your pick on NYBC, I believe. A great pick, by the way.
So far.
Yeah. I think it does work, but I think that our 3 extends a little bit further from where we are. We're just about ready to break above our prior high, our 4170 over here. So, that could be pretty euphoric. So I think that could push us at least up to the 61.8 with the rotation that we have, especially if they continue to favor it. We also have a confirming RSI on the weekly as well. So, confirming for this leg. This was a prior high. So, I look at this as drive 1. So we got this drive 2 to build out. Should have a very similar structure, roughly assuming, I'm just going to steal this for a second. So, that puts our upside at 47.
All right.
You like that look?
Well, I'm not a bank fan, but, the banks are getting help from the Federal Reserve ahead of a crisis because they don't want a crisis. And we just talked about what's going on in banking and the U.S. Treasury market and regulations for capital requirements in the Investing 2020s program. I think that if banks do well, other things do better. However, maybe there's a trade for a while.
I'm more thinking steady Eddie, because when things stop working, okay, and we don't see the continuation, especially when we have breakouts, setups, etc. When we start seeing a failure rate of 60-70% on breakouts because there's no continuation. Basically they're pumping it and then they're gone. And that's extremely challenging from either a trader or an investor standpoint, because it implies that we're stagnating. And that's one of the concerns that I see right now, is that, I'm back more on my thesis that we build out that flat and we sort of get stuck there and we're within those ranges. And at that point it becomes very challenging to the upside. Honestly, the easiest thing to chase is, divergent RSI on tops with specific names, because consistently they're coming off. I mean, right. That's just where you get more of your consistency. And that becomes very challenging for a lot of the positions that we have. So, all right, next crypto, or is there something else you want to look at?
Not just Bitcoin.
Bitcoin. Yeah, I think it flushes. Now, last week we got an inside week, last Friday we got an inside day. I'm thinking we come in and build out an inside week, but I'm going to go back to the daily for a second.
So that's saying around 60,000?
Yeah. But historically, in this leg, we've never gotten our drug. It's always been very shallow.
Okay.
382, so
we might only see 66,000.
Yeah. Well, let me come in and throw the fibs up, and then that'll give you a better visual. Just measuring our first leg, look at from a corrective standpoint. So 50% back is 62. So the first target. Notice how our flush went right to the 382 and we got bought.
Yeah.
And if we go back and we look at each leg, 382 got bought.
Yeah. So the reason why I set limit orders in general is because of the fast moves. I think in Bitcoin, that's even more important.
Yeah. If this becomes an elongated, right, or an extended ABC corrective leg, we could come all the way down to 45K. And that becomes very challenging longer term. Now, I think there has to be a catalyst for that. But, this shallow retrace, it's telling us we're going to get a drawdown. I just can't tell you if it happens here or it waits until we get up around 80K. I think 80K is much more consistent with a breakdown, or a 90 or 100K. Reason being is Bitcoin does like to come off on even numbers. So that some of the whales have a sell, just like they had a sell at roughly 75K. They actually sold a little before there. They had a sell here at 69. They had a sell here at 64, but they didn't have a sell down here at 52, because these were the whales unloading and then buying it back on the dip. So they sold on the high side and bought back. Honestly, they have the technology coming in where they can, the one thing about Bitcoin over indices is that the ability to track, if you're willing to pay for it, of where the volume's coming from. You can see the accounts move the Bitcoin from their safe wallets to the exchanges. So when you see large blocks of Bitcoin being moved to the exchange, you can see them liquidating, because it'll be blocks that are just indistinguishable. You get 5,000 Bitcoins moved from a secure wallet to the exchange. There's only one reason why they're moving it to the exchange. They plan on liquidating, or it'll move it in some way to something else. And you can see it in real time. And that's honestly one of the advantages I find in trading Bitcoin, because you can visually see it. Problem is, you got to stay up middle of the night in the Asia market, which I absolutely hate, because you definitely aren't going to make the U.S. Open if you stay up for Asia.
So I guess with the whales, I would say here's one thing to keep an eye on, is if MicroStrategy ever gets into trouble because Saylor screws up the rest of the company, or he changes the structure of the company, watch out if he ever is forced to sell. If he's ever forced to sell, that's going to be a hit on Bitcoin for probably a month. Now, I don't expect that to happen anytime soon, but I expect it to happen eventually, because Michael Saylor is a weirdo, and weirdos make mistakes, just like Elon Musk has been making mistakes. And the Bitcoin miners are 60% clean energy that they developed. I mean, it's a nonsensical thing. It's just a way for somebody to grab money and headlines. But even if they do pass that tax, it's not really bad for the miners. I mean, that'll be the narrative for a week, but it'll just drive the price of Bitcoin higher, which I would say is the secret motivation of the US government, because if the world adopts the dollar and Bitcoin and wipes out 50 or 100 other currencies, that's good for the dollar. That drives foreign direct investment into two things: the dollar and dollar debt, and Bitcoin, which doesn't have debt. So Bitcoin is a tool to wipe out other currencies and leave the dollar as one of the last man standing. I wouldn't discount the economic hitman nature of that argument. I think the world is going to continue to be heavily in the dollar, and Bitcoin's going to replace a lot of other currencies.
I would agree. Well, I mean, to a great extent, the U.S. government is already holding Bitcoin as a reserve currency without saying it's a currency they're holding.
Right.
In their basket of currency, right. Otherwise, why haven't they liquidated all of the seized Bitcoin?
That's a pretty good question there, Shooter. Why do you think? Right? Yeah, it'd be like here up in Wisconsin, we say, "Hey, what about that there? Hey,
Once in a while, I have a good thought.
Why hasn't the United States liquidated their Bitcoin holdings? Indeed. Good day, sir.
Yes.
All right.
But I do think we come off at some point here, though. I just can't tell you when. That's I never like making that statement, but I see it coming. I just I can't pinpoint the date.
Well, I think that pink band there probably makes a lot of sense somewhere in there.
Yeah, I mean well, consistently you get if you take the fib extensions off of your legs using Elliott wave, you got one of three outcomes. You get a shallow retrace to the 236, or the 382, or 50 to the 618. I mean, and then if it becomes an extended retrace, you get to 78.6. Right. I mean, so it's consistently going to be in that box somewhere. How aggressive, they're just forces outside of our control that are going to determine that. And I wanted to show you one other thing. I wanted to jump off base here for a second.
Oh boy, everybody likes the panda.
Yeah.
Is that the one that you keep in your backyard?
No, I wish I had a panda in the backyard. I actually love them. It's just one of those screen things.
Oh, a lot of Tesla on there. Look, Stone.
This is open interest percentage changes. I've been spending a lot of time here drilling down. All right. Notice some names that have popped up here. I just want to share that with you.
Who loves Stone?
Yes. Well, we got 18.
Was that another one that I was 2 years early on?
Yeah. I mean, look at the percentage change, the jump here. I mean, from normally 5 to 700 open interest.
So they buying all calls there?
Yes. I mean, big numbers. Okay.
Do they have earnings coming out? Oh, those are expiration. That's a couple days from now. Oh, that's just day traders.
Yeah, but still, I just like to point out.
Traders being traders.
Yeah, we're always traders. But hey, no, that was.
Can you sort by expiration date? All right. So 2 to 5 months out, it's all about Tesla.
Yeah. Well, yeah. I mean, Tesla's got some huge numbers coming.
So
I mean,
what is Tesla's price right now?
Oh, 162, I think. Let me flip back over to mine.
So somebody's buying or selling a ton of at the money calls. So
Do
you think they're selling all those calls just to collect the premium?
They could be.
Huh.
Hold on, let me get over to my Tesla.
So that plays into your theory of somebody always knows something.
Yeah.
So what do they know?
Yeah,
that's what I want to know. What do they know?
A lot of heat on Tesla. I mean, I'm thinking we come down. Either we get a huge rally here, or we're going to 146 from where we are now. And either case, we could get both. I mean, because we're sort of on this could do something like that. They always buy the dip. Now, last week they didn't on this drawdown, this breakdown here. The dip buyers were gone, which was good because I was short. But, what hesitates or gets me to hesitate is, this was a solid 2 drive, right? So this is drive 1, right? And we're confirming here on the daily, and we're getting a divergent low here. So honestly, Tesla likes to run early. I can't tell you the number of times I've been on the wrong side when I try and trace after that second drive on Tesla. It doesn't work.
So in the chat room over at Fundamental Trends, you asked about hedging something, and I said hedging is for wimps. Just buy the dips. And I think for most stuff for most people, most of the time with most stuff, that's true. However, if I were going to hedge, if I were allowed by my regulator to really go short in client accounts, I'd probably be betting against Tesla. I just don't see anything juicy from them technologically. I think the competition continues to come. The only thing they have going for them is they have the cleanest balance sheet out there by far of all the car companies. It's not even close. The thing is the other car companies, as they rationalize supply and demand, they have assets to sell that Tesla doesn't. So the actual balance sheet advantage of Tesla is that they don't have to go through the step of selling off a bunch of stuff. I just don't see why Tesla is just so much more valuable than all these other car companies that outsell them.
It's going to come down to the lower price point car. They actually produce a 25K EV, and they can get production rate, or even the thought that it's going to be successful production rate.
Kia and Hyundai can already do it. So, I mean...
Yeah, but they don't have the same numbers. They can't produce the same number they don't have the facilities built.
Hyundai and Kia? They're huge.
The reason is because they're producing other vehicles. They have to.
Well, right. They have to switch over.
It's like taking a Ford plant. How much money does it cost to convert a Ford plant to build a tank?
I heard like $40 or $50.
No, whatever the federal government pays for. But in a normal environment, the federal government's not going to pay Kia, a foreign company, to convert their current plants that are building gas automobiles.
I get it. Right, because we want them here. But they build them here too.
Yeah, I know. And there are actually a couple of plants, especially in Mexico, that, they're going to start building EVs in Mexico to come into the United States, including a number of Chinese companies. So I think you're right on the competition, but at the same time, the competition doesn't have the moat that Tesla has. So one thing that Tesla has always had is the volume that other EV makers haven't had. And all we need is the bankruptcy in 1 or 2 of the smaller EV manufacturers to occur, like back with the Model T.
All the startups are getting crushed. They're
Yeah,
all getting
I mean,
wiped
they
out.
are. I mean,
They're going to get bought out of
doesn't-
bankruptcy. They're just going to get bought out of bankruptcy.
Yeah, I mean, if Riven isn't successful, I think a lot of other ones are going to fail, and that will be a catalyst for Tesla because everybody will be exiting the other EVs and they want some exposure. It's just right now they're still thinking the other EVs have an advantage, aka much like your thought. But I think right now our success, because really the Tesla truck has not been a catalyst
because it's ugly.
Yeah. Well, it's yeah. Have you actually been in one?
I've actually have seen one down in Chicago.
Go test drive it.
I don't care.
No, really, serious. You do a video, go and test drive the Tesla, and tell me what you think of the truck after you
I've driven a Tesla. I mean, I drove the Ford EV. I just don't think any of them are that different. I mean, unless you have like the most sensitive nuts in the world on that seat, you can't tell the difference.
No, so, it's more like a cockpit feel, bro. Yeah. I mean, it really is. Yeah, you'll have a different opinion. You go test drive.
No, I won't.
No,
I'll think the same thing. Yeah, I guess it's kind of cool, but who's gonna buy it?
Yeah, I know. It's like it was a little small. I like the new Verizon.
I still think that ultimately, Tesla's smartest decision would absolutely be to upgrade all the cars that they have, right? Make the Model X a $65,000 SUV, make the Model S, the S and sexy, into their super sport sedan, make it more Excalibur like, and have the 3 be their small car and have the Y be their, RAV4 competitor and whatnot. And then you have your pickup truck. They stop at 5 cars. They go after the high end of the market from 35,000 on up. They don't even screw around with the small stuff because the margins are small, right? Smaller numbers, smaller margins. And they stop building plants and they just do what BMW and Mercedes have done and capture the high end EV market. If they did that, they'd have less problems, less capex, bigger margins, more prestige. And he's too arrogant to do that. He has first mover advantage. He has the high end of the market. Why chase everybody into the low end of the market?
Musk has always liked to chase, the big play. I mean,
women.
I think he's following his plan. He's not listening to anyone else. I think he's doing.
Well, he should listen to me.
Say that.
He should listen to me. He should not be going after the $25,000 car market. 35,000 is up is where he should live.
Well, that's because
the Model 3 should be like his 3 Series Beamer.
Now,
that
whether
should be the entry level,
it's real or a fallacy. He's chasing that energy efficiency for the globe, where we have to get all of the gas production vehicles or gas vehicles off of the road because of pollution.
I think the smarter solution for him would be to license out technology.
He's already doing
1 or 2. Well, no, not the current stuff. He made a lot of stuff open source a long time ago, but the new technology and processes and everything, rather than building another Tesla plant, he should just like GM did these joint ventures. He should just go to 2 companies, one in America and one in Asia, maybe one in Europe, and say, hey, I will sell you the technology to build the $25,000 car. You're going to pay me $500 or $1,000 a car, and you build them. You handle the rest of it. He should just license out the tech for the small cars and not build them himself.
We saw a concession this year.
Oh, yeah, and use my charger.
Yeah, but we saw a concession in EV charging. The reason being is because everybody was going to spend too much money trying to duplicate and compete, sort of like how we made a standardized electrical socket. One thing Musk has that hasn't been done is he's not been printing other models for other manufacturers. It's just like a cold press. If he starts licensing his factory out to, let's say, for example, because there's a lot of advantages in his manufacturing process that nobody else has, and he has tied up the patents for the patent period, 14 years. So really nobody else is going to make that printing press.
Right. Here's the thing. If he builds it, then he has to spend all that money to build the factories. The better solution is to go to the existing car makers and say, I will send you consultants for you to build the factory and for you to build the car, and you will pay me a royalty and you will use my chargers. And he can go asset light with very little capex and still have the whole world in $25,000 EVs, but he doesn't have to fart around with building factories and building the cars because the capacity is already out there. Other companies are happy to save their own skins, right? By saying, well, we either have to develop it or we can buy it. So let's just buy it, right? That's the solution. And that's why at some point I will buy Tesla when it gets cheap enough for me, because I do believe the smart decisions eventually get made. I just think he's stubborn right now, and he's going to be faced with, and I'm sure he's thinking about what I'm talking about already, and I think he's hinted at it. I think that in the next, maybe not, it might not take 3 or 4 years. It might only take a year or two. But at some point, the stock just gets too cheap for the value and the market that's going to expand in the next decade, that he'll make a good decision and pivot into that market somehow. If he announces he's building 10 more factories, I'm out. But if he says, we're going to work with Stellantis so they can make a mass production vehicle, and we're going to work with Hyundai so they can make one, and we're going to work with GM so they can make one, or Ford. My guess it would be Ford because they already have a pretty good relationship. So if he works with Ford, Hyundai, which is gigantic, and pick your and Stellantis because they're Fiat. If he picks three, those three actually make sense. If he picks three companies, say here, you build the factory, we'll give you the tech, the processes, we'll give you consulting, we'll give you everything you need to do this. You go have that 20-something thousand market. We don't care. If he does that, he makes a fortune without having to spend $1 trillion a factory, whatever they're spending.
I think he licenses the robots. I mean,
the robots. So it's not necessarily the robots. Everybody's got Ford has the robots. It's the bottom up manufacturing style that they introduced a year ago. Rather than having a shell and then you stuff stuff in the shell, you build from the bottom up.
I still think Tesla at some point is going to get back up above $500. I think unless he gets taken out on a margin call, that's the only catalyst to the downside. Because at some point, if Tesla stock happens to get too low, he will get a margin call just because where he's
gonna do what I just said because he wants to go play with spaceships. We're on the cusp of that already. It just doesn't make any sense for them to compete. Why compete? Dominate the high end.
Yeah, I don't.
The medium and high end. Dominate the medium and high end where the margins are.
The high end and the 25K EV.
It's worked for Mercedes and BMW.
Yeah, but I mean, is there a reason he couldn't do a high end and a 25K EV?
Yes, you got to build all those fucking factories.
Some of those plants. I mean, this plant that came up in Texas. He made the decision. It was done and gone in 7 months. They got rolled cars out the door. Yeah. I mean, that's pretty doggone quick.
It's a lot I don't remember
a day where Ford has built a factory in less than 5 years.
It's a lot of money, bro. Competition is bad for investors. Period. You want to be a monopolist. You want to preserve as much monopoly pricing power as possible. And his original sexy S3XY is where his power is. And if he takes it down to a lower level, he loses sexy. His margins go down, which the street will hate, and you become McDonald's instead of Ruth's Chris. And while there are fewer Ruth's Chris than McDonald's, tell me where you'd rather eat. I mean, luxury works. Ask Tiffany's. I mean,
honestly, works for me.
Yeah, well, I mean, look at Men's Warehouse and Joseph A. Bank. They can't make it. One of them went bankrupt and they had to merge. I mean, the low end is good for competition, and people will always try to get in there, trying to get their cut because they're starting with little, and a little more would be better. But when you're already at a big number, how do you keep the big number? So when this correction with Tesla is done, whenever it's done, they'll make smart decisions, I would imagine, unless, weird guys make weird decisions. But the investors will eventually tell Musk, hey, and really the court ruling on his pay package helps future investors because they'll have more power versus him having more power. The shareholders can tell him, because he owns less shares now, we're still the board. So at some point, another lawsuit happens if it needs to happen, and he loses that one too. It doesn't matter where he is.
He loses control of the board. All Elon does is go into artificial intelligence and robots.
Well, that's my point though. But Accenture or somebody will come in there and say, "Look, dude, you'll make a lot more money, and the world will still change."
Well, look at Apple,
and you can go play with space robots.
Yeah,
that's that is what's gonna happen. I don't know when, but that is what's gonna happen. I might be 2 years early again, but that is what's gonna happen. In the meantime, the stock is gonna correct because people only the narrative right now is EV's bad. Demand's not there. Demand's not there. Bullshit. The pent up demand on EVs is through the roof, and they're waiting for what you said. They're just waiting for what you said. When the sticker price of an EV is similar to a gasoline car, EVs will outsell gasoline cars 4, 5, 6 to 1. And then the car companies will say, "Why are we making gasoline cars?" Right?
Exactly.
So, which is why I'm buying 20-year-old Mercedes right now. That's what I'm doing. Hey, Uncle Carlo, you got all those old Mercedes. Save them for me. When you kick the bucket, that's all I want. I don't want your money. I don't want your land. Just give me those old cars.
No, I want the land.
Yeah. He has 10 acres up against a farm out in Johnson Creek, and he's Wisconsin, and he's actually on a creek. It's a pretty nice spot. In the distance, on the southwest view off his porch, you can see an old Cargill plant. So it's the one building on the horizon. Everything else is trees and hills. There's a Cargill plant with the Cargill sign on it. It's pretty. I think it's a neat juxtaposition. All right.
Okay.
We babbled on again. I tried to get this done faster. Now I have to edit it again.
See, you babbled. I just followed.
Yeah. All right. Have a great weekend, everybody. All right. Take care.
All right. You as well.